Ever wondered how much a company like Revel Systems, a major player in the point-of-sale POS world, is actually worth? It's a question that pops up in conversations about industry giants, investment rounds, and the overall landscape of tech. Figuring out a company's valuation isn't as simple as checking a price tag. It's a complex puzzle involving a lot of different pieces. In this video, we're going to dive deep into what Revel Systems valuation is, how it's calculated, and why it matters. Before we jump into Revel specifically, let's talk about valuations in general. What does it even mean when we say a company is valued at a certain amount? Essentially, it's an estimate of the company's total worth. This includes everything from its tangible assets, like equipment and real estate, to its intangible assets, like brand recognition, customer base, and proprietary technology. Valuation is a crucial metric for investors, as it helps them decide whether or not to invest and how much to offer. It's also important for the company itself, as it influences its ability to raise capital, attract talent, and make strategic decisions. Now, how do you actually calculate a company's valuation? There are several methods, each with its own strengths and weaknesses. One common approach is the discounted cash flow, DCF method. This method projects the company's future cash flows and discounts them back to their present value. Essentially, it tries to estimate how much money the company will generate in the future and what that money is worth today. This method relies heavily on assumptions about future growth, which can be tricky, especially for rapidly evolving tech companies. Another method is the comparable company analysis, CCA. This method involves comparing the company to other similar companies that have recently been valued, either through acquisitions or IPOs, initial public offerings. By looking at the valuation multiples of these comparable companies, such as price-to-revenue or price-to-earnings ratios, analysts can estimate the target company's valuation. The challenge here is finding truly comparable companies, as each business is unique. Then there's the asset-based valuation method, which focuses on the company's net assets, its total assets minus its total liabilities. This method is often used for companies with significant tangible assets, but it can be less relevant for tech companies where intangible assets are often the primary drivers of value. So, how does this apply to Revel Systems? Revel is a cloud-based POS and business management platform. They cater primarily to restaurants, retailers, and other businesses in the hospitality industry. They've been a significant player in this space, competing with other major POS providers. To understand Revel's valuation, we need to consider several factors. First, we need to look at their financial performance. This includes their revenue growth, profitability, and cash flow. Unfortunately, specific financial details for privately held companies like Revel aren't always publicly available. However, we can look for clues from news articles, press releases, and industry reports. For example, have they recently announced funding rounds? If so, how much did they raise and at what valuation? These funding rounds provide snapshots of the company's perceived worth at specific points in time. Second, we need to consider their market position. How large is their market share? How are they positioned relative to their competitors? What are their competitive advantages? Revel's focus on cloud-based solutions and their specific features for different verticals, like restaurants and retail, are key factors to consider. The overall growth of the POS market and the increasing adoption of digital payment solutions also play a role. Third, we need to look at the overall economic environment. Factors like interest rates, inflation, and overall market sentiment can all influence valuations. For example, during periods of economic uncertainty, investors may be more cautious and less willing to pay high valuations. Fourth, the company's future growth prospects are crucial. What are their plans for expansion? Are they entering new markets? Are they developing new products or features? Revel's ability to innovate and adapt to the changing needs of the market will significantly impact its future growth and, therefore, its valuation. Now, getting back to the original question, what is Revel Systems valuation? Unfortunately, without access to private financial data, it's impossible to give you a precise number. However, by considering the factors we've discussed, their financial performance, market position, the overall economic environment, and their future growth prospects, we can start to form a general picture. Let's say, hypothetically, that Revel has been experiencing strong revenue growth and has a significant market share in a growing industry. In that case, their valuation would likely be substantial. If they've recently raised significant funding at a high valuation, that's another indicator. However, if their growth has slowed, or if they're facing increasing competition, their valuation might be lower. It's important to remember that valuation is not an exact science. It's an estimate, a snapshot in time. A company's valuation can fluctuate significantly based on various factors. News events, changes in the market, even rumors can impact how investors perceive a company's worth. So, while we can't give you a definitive answer on Revel's exact valuation, we've explored the key factors that go into determining it. We've looked at different valuation methods, and we've discussed how these methods apply to a company like Revel. Understanding these concepts is crucial for anyone interested in the world of finance, tech, and investment. With that said, thanks for watching, and until next time.